Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 27th of 2020. Gall, we've been doing this for about 16 years now. That is kind of a long time. For those that don't know it, we've got a new guest. James Kohler, or Jim Kohler, is here with us tonight. Please feel free to welcome him so that he can see what our group's like. If I unmute you, no swearing, no cussing. Please leave that to me to do on my own. All righty, here we go. Jim, there's a couple people that have said, welcome, Jim. And there's one that said, welcome to the group. You'll never regret spending your Monday nights here. So Lance, who usually gives me a bunch of crap here and there, I'll pay off that $100 first chance I get. All righty, let's get started here. Let's make sure we're all on the same page. Last week was one of our worst weeks in the last 4 months. In all honesty, we have a coronavirus. And if I was to ask you, what goes well with a coronavirus? There are 5 of you that just typed in a lime. Oh, that was amazing how quickly the 5 of you put that in there. That is absolutely hilarious. And that's the first thing I thought of too. I'm glad none of you put a worm in there. But yes, with the coronavirus, it shouldn't be a free fall, but yes, you should put a lime in with your virus. Now, I'm going to get through the recap really quickly. S&P fell down 0.9. Let's see here. Energy sector slid 4.8%. Materials and financials slid 1.9 and 1.8 respectively. We actually had some downgrades for the first time last week. And of course, our Zions Bank shares fell 8.1% on a below a mean estimates higher than expected revenue for the quarter, which is bullcrap. But that brings us to why we do what we do. When you see a move like Apple today, we had a 9.36% drop. Thank goodness we already had puts in place that'll make up roughly half of that downward movement. Now, I'm going to show you another thing, but let's go through and let's see how well our protection was working today. Boeing down 6.45. We made up $2.83, about a third of it right there. That's not the best. Bank of America. This is a nice one. We don't have it. It's reset, the last change. But a $6,000 drop on the stock, and we made up $5,148. So on this one, we're at like 85% of the drop we're making up. That is the power of having protection on your position, especially around earnings time. There's another pretty big one, right? Baidu. A $31,000 drop, we're making up 66% of it. That's what I like to see. Let's go take a quick look at Zions Bank, since that's the one that they mentioned, one we happen to have. Zions Bank, we're doing good. $680, we made up 500. Not bad at all. In fact, pretty neat for a stock that's trading at 46.46. We still have the right all the way out to February to sell it at $50 a share. This is what those powers of options do. This is why we're using some options to protect our stock, to protect our positions and where we're at. With that said, let me get back to some positions where our stock replacement strategy is. We have a position, $27. It's now worth 86. $27.80. It's now worth $106. We've got some opportunity there where we've got a great return. And let's face it, Apple's gone up like there's no tomorrow. When there's a little bit of a scare that probably the coronavirus is not any kind of computer virus and won't affect Apple at all, we could see a pretty good pullback even though they have their earnings tomorrow. Out of curiosity, how many of you would buy long puts for your calls here at 210 or 230? I see a couple no's already came in, and I see a yes. For those that said no, why would you not purchase long puts on Apple to protect your long call shares? For those that said yes, tell me why. For those that said no, you wouldn't add long puts, please tell me why. For the one of you that said yes, please tell me why. So the yes answer was, well, it's to protect profits. And I see no problem with that. To be honest with you, that makes some sense. I get it. I see it. I understand it. Mod, let me read that here in a second. For the two that said no, you wouldn't. One of you basically said, and I'm going to paraphrase it because you wrote a huge paragraph. You basically said it's a stock replacement strategy and you're letting it ride. But when we've had stock in the past, we've protected that stock. So the short answer is you're gambling. You're saying, hey, I'm going to let it ride. I'm going to go ahead. I'm going to risk a 100% plus return, a 200%, well, a 200, 300% return. You're going to let it ride. You're going to risk it. But you are playing with the house's money. That seems a lot to risk, but I get it. And the other one that said no was actually what I was looking for. The other one of you that said no, and you made the comment, it's too expensive. And I would kind of agree with you. If you are wrong, you would lose $15 to $24 on some long puts. The positions are getting more expensive. So what's the alternative? How else might you be able to protect this position? Bill, you're not allowed to say anything. And Keeve, neither are you. Yes, you've got 100%. You've got a 300% return here. And you have a 225% return here. Ooh. Dang it, I like both your answers. So the first answer that came in, and Lance, I still think you're a smart ass, but it's a great answer. Hey, you book a profit. Probably the best way to protect a profit is you book it. You book a profit, right? In fact, if you were to book one or two of these, it completely pays for the other 5 of those. If you were to book 2 of those, it gives you 100% return, and you could still let 2 run for you. I like it. I like it. I like it. I like it. Yes, you can book a profit. Maud on the other time said use a spread. So let me circle a spread we have down here at the bottom. One of the ways we were working on a $7.52 drop, you could have made half of it up by going way out in time, excuse me, and selling a leap short call. Let's work the numbers on this. If it's okay with you guys, let's work some numbers on this to get where we're at now that we've just made this a leap call spread. And Maud, that is an ingenious idea. I love it. So we're talking about protection, right? Let's do protection using a leap short call, which truly isn't protection, but it's a credit. It's truly not protection, it's a credit. But that is not what I wanted. I thought I took another. Let's make sure here. Did I have a screenshot? I don't think so. Oh. All right, so here we go. Equal to you guys still mm. All righty, how about now? Crying out loud. Trying to make Kiev. Sorry guys, we're snowing up here. And it is I don't know what it's blocking, to be honest with you. All right, do I sound better again? Do I sound okay? Perfect. Sorry, guys. All right, so the short answer is I might be losing my internet back and forth, and if I lose it again, I might just have to be canceling this, and I'll pre-record it tonight, and I'll get it back out tomorrow. But here we go. That's $78.57 profit, right? For some or a little downside protection, I can sell a June 21 $210 call, right? I can sell a June 21 $350 short call for a $24.10 credit. Now, new risk in position, pretty cool. $27.80 minus $24.10 now means I've only got $3.70 of risk in the trade. More importantly, I have about $20 of downside and what's really neat is equal to 350 minus 210, which is equal to $140 minus my debit of $3.70. It's like $133.30 or $103.30 divided by 370 times 36, or it's like 3,600% return on investment. Which is a pretty good return on investment. We like it, right? But our market has a virus. That can't be cured with a lime. But it should be, right? So with that said, if I was to ask you where our markets end this week, what would you tell me? If I would ask you where our market's going to end, what would you tell me? I've got a couple downs. I've got two lower. I've got one. We're going to get our butt kicked, right? That's kind of funny. We are probably going to go lower. how it's kind of funny. One person just typed in 20% recession or bear market pullback. Will we go through a 3 to 7% normal pullback? I don't know the order, but I think Ebola dropped us an even 10%. I think the SARS put us down like 7.8. So I would expect maybe a 10% pullback, right? Not sure if it will continue to run on news-driven events or if earnings were help. Forever the optimist. Well, that's kind of interesting that you would say that, because if we took a little look at maybe what was working for today, Target, AOBC, Gold, Lennar, Walmart, Square, a lot there was working in an area that was retail, was consumer based. So if we were to take a look at earnings, for us, Apple and Starbucks tomorrow. Citigroup might not do so well, but could do really well. eBay is a financial, but it's like a pseudo financial, like MasterCard, Discover Card, and Visa, which are all expected to do extremely well. AMD, a lot of people are still saying chips have a way to run. Wednesday, GE, MasterCard, McDonald's, Cree, Las Vegas Sands, Microsoft is expected to do really well. PayPal is expected to be really well. Facebook, and we have Boeing. What a crapshoot Boeing has turned into. But I like what their CEO is doing. In all reality, the FAA is saying there's a good chance Boeing's going to get their planes back up in the next, or at least be lifted with a training program in the next 2 months by March. When did Boeing said they're going to be back in production? Anyone know? There you go. They said mid-2020. We have a new CEO that, instead of promising earlier, is pulling a Steve Jobs out of his hand and saying, hey, let's go farther out in time. Let's give some worst case scenarios. So that way, if we can come in early, we can get a bonus. We can get a bounce. I like the way they're thinking. Thursday, MO, Altria, Coke, Raytheon, Murphy, UPS, Valero, Amazon. There's a big one. And what did I miss? Where's Tesla at? Tesla's on Wednesday too, excuse me. Thursday, Amazon's a big one. Wynn, Visa, Eli Lilly, US Steel, Caterpillar on Friday, ExxonMobil, Honeywell, Chevron, Sohu, JCI. A lot of big earnings. This is like the first week of big earnings out of 4. And earnings really could change the tide, but you got to beat top and bottom line and have your guidance that meets and or beats expectations. And apparently you can't be a financial. Zions Bank and JP Morgan, both getting crushed. Well, Kevin, Bank of America and Wells Fargo are also being crushed, and they are. But I think those two have more to lose. I mean, Wells Fargo gave an awful quarter. Any way you look at it, Wells Fargo's meant to go down. They suck. There's a short answer. They suck. Bank of America really didn't suck, but it sure didn't impress, especially after the run that they had. Bank of America is one to look at here in August. Looking at August, we'll see where we're at. Anyone knew that we had an FOMC rate decision this week? Nah, not even important, right? FOMC rate decision, not even important. They're not going to raise rates, not going to lower rates. Shouldn't get more hawkish. We're okay. GDP will be a big one on Thursday. Personal income, personal spending will be the big ones on Friday. Not to mention Apple tomorrow, Microsoft, Tesla, Facebook on Wednesday, Amazon, Visa on Thursday. And then in all honesty, ExxonMobil and Chevron will pretty much suck it up on Friday. I wouldn't have any hope in Caterpillar or Honeywell as well. We look to have a bit of a rough patch, which does not mean that there are not some stocks that can beat the market, that there are not some stocks that I could go with or stay with that'll beat the market. Now, an interesting comment just came in. I would say we're from China stocks or just buy puts because of the coronavirus. Well, so let's talk Apple really quickly. Apple is getting thumped because of the coronavirus, right? And let's put this into perspective. 2,600 cases of the coronavirus worldwide, with 83 people that had died. So let's put this into perspective. Let's say all 2,600 of those people infected die. And they're all Apple subscribers that will no longer buy an Apple phone because they're dead. Would Apple losing 2,600 iPhone purchasers make a dent in the 75 million plus phones they're going to sell next quarter that they sold last quarter? I guess the 76 million they sold last quarter, the 46 million they might sell in the next quarter. If every single person infected with the virus, all 2,600 of them died, is that going to make a dent in Apple's earnings? Not a lick, right? Oh, but Kevin, factories are not having people go to work after the new year, and they're gonna, the automobile people are over in China are going to be slower, which will hurt General Motors, right? Or government motors, whatever you want to call them nowadays. But it really won't hurt anyone else. Kevin, what about your beloved Baidu, right? The Chinese Google. Well, everyone that did all these Google searches and advertising did it for the new year. They're going to have excellent numbers. So you keep more people inside on their computers. I think you're going to be okay with Baidu. Alibaba, hey, more people are going to be inside. They can't go out and shop. They're going to use Alibaba purchase and send it to your doorstep. Probably will help, I want to say Tencent, but that's not it. IQ and NetEase, as they're now stuck in their house, so they're going to play more freaking games. Yes, the original idea would be stay away from some of these positions. But hopefully, as you heard what I've said, you'll see it should be a buying opportunity. So when it comes to for how long, who knows, but in an earnings perspective, this should be a buying opportunity. So let's take advantage of it. How do we take advantage of it? We have some protection on. When things look to turn, off we go. It'll be interesting because right now we're just dipping below, but someone tell me, what does that little cross-looking sign mean? What is that there? That little cross-looking sign that we get on our chart. A doji. Hence, we have a possible reversal that's backed up with a 50-day simple moving average to act as support. I found that extremely interesting. So right now I'm going to my phone. I just want to check the futures. Out of curiosity, wow. And our futures are up 100 on the Dow, 10.75 on the S&P, the NASDAQ's up 34.5. It looks like we may be getting that bounce tomorrow, which with some of the stocks that have good earnings, we might get some follow through. Are we bullish anymore? No, we're bearish. But we have a couple indicators that are telling us we might look for a bounce. The Williams percent R is one of our strongest indicators. We should have a relief rally. S&P 500. We didn't quite get the doji, but it's pretty close. We could have another 50-point drop till we have our support, but our chart looks much like the Dow, just not quite to that bounce on the 50-day. And actually, the NASDAQ wasn't an engulfing candle. It was a growing candle. Oh, what's the word I'm looking for? Not upside, not a hammer. It's well off the lows for the day. With some pretty good earnings coming up. So we have an opportunity to look at a bounce, at least for tomorrow. And really the real bounce, the big bounce, will probably come Thursday at the end of the the heck am I trying to say? At the end of the Lunar New Year's in China. But we're set for a bounce over the next couple days. I still think we're going to end the month of January at 2%. That's coming where we're up like 0.2%, I think, for the year. Let me check that out really quickly. S&P, I know we gave up all of our gains on the Dow, but again, no one really compares themselves to the Dow. Year to date, we're up 0.4 on the S&P. So another 1.5%, will be up 2% for January. A lot of earnings on economic reports. I've updated the earnings. I have a couple interesting articles. Facebook valuation, it's not too late. I agree with the article top to bottom. Definitely do read through this article to where even though Facebook is above 200, even around 220, there is still $70 to $130 of upside on Facebook, minimum. Taking a look through, Films Parks should lift Disney, an upgrade by Bank of America. Definitely take a look at this one. It's interesting. Face tailwinds, including Disney Plus. Do you guys remember what the knock is on Disney Plus? What's the knock on Disney Plus? There you go. People leaving. Well, people can leave all the time. But if you get 10 million subscribers, man, are they growing at a record rate. They have over 10 million subscribers. Disney's going to bounce right up to 150 again pretty quickly. So comment was made after The Mandalorian, not much to see, and I kind of thought that. Believe it or not, we've been introducing to our family to some of the old Disney movies that are on there. And it's been pretty fun to see some old movies that I maybe didn't realize were Disney that have fallen underneath their umbrella. And we've had a good time enjoying some movies that are 80s classics. That's the best way to put it. It's really a family. You have young kids, you're going to do fine with Disney. I made the comment that came out last Thursday. White House has started to work on second round of cuts to boost growth. These tax cuts are why we probably did not see the selling last year, which means when we do have our sell-off, you got to be nimble. It's probably going to be a quick one. When we do get our sell-off, our start of our sell-off, a lot of selling that didn't happen last year because they're hoping for better tax rates this year. It'll be a quick, vicious sell-off to the downside. Very interesting article for you guys to read through it. Just a little something about Rio Tinto. I'm going to have $1.5 billion expansion in my own state. This explains where I thought I got off on FCX for the three of you. I didn't protect it. It was down low. It was up 41 cents, down 42 cents the next day. We were good on it until today. And today was a crusher. I know someone in Rio Tinto. I really thought SCX would do better from what I was reading from him about the copper and about the mining opportunity in the next 3 to 5 years. And dang it, Rio Tinto is obviously a better company than Freeport-McMoRan right now. Stock traditionally cheap. Why Warren Buffett isn't buying. A very interesting article. Please read through it. Please read through it and tell me what you think. And then I'm putting my little Kobe Bryant comment in here. I know you're in here, so I'm just going to make this comment. He was a fabulous player. He might have even turned his life around after he made a pretty big mistake. And I'm sure, you know, all professional athletes can have their way with women. But when you cross the line from cheating on your wife to rape, that's a point where he lost me as a fan for forever. So kind of sad that his daughter perished with him. I'm not personally shedding a tear for Kobe Bryant's death. Parents should never lose children. It's horrific. I actually have a friend from high school who is on the team, whose daughters, her twin daughters, are on the team with the Mamba team of the 13-year-olds that lost their lives. And she's devastated. So it's obviously a horrific accident. With that said, I'm not necessarily shedding a tear for Kobe. I'm shedding a tear for almost everyone else. Let's just put it that way. I am putting it in here though, just so you can read a little bit about what he was talking about, and it seems to be appropriate for the week. With that said, any questions you guys have that I can answer for you? Any questions or anything that I can sit around and ask an answer to or give you an answer to? And you know what? Let me jump in with the first one already. What I think of Boeing. And I know it's going to come back from Lance, right? So if I was really worried about it at this point, without using blind optimism, I still think Boeing has a good chance to come back. Even with cutting some of their production numbers, their Dreamliner does well. They still have their backlog. It's one of the rare companies that has a decade of earnings out in the future there for the taking. When they first announced, they picked up $6 billion the first day of lines of credit if they need it. How they work out what they're going to work out, it would be easier to write off some planes than use the credit. They're already made. It's a write-off. Tax-wise, it's an advantage. Give a couple planes out for free. You have a lot of planes out for free, especially to someone like Southwest and United. And it's amazing how a company can kill 500, 600 people and have their stock price be back where it was pretty quickly. And it does happen time and time again. So that's where I'm going to go with. I think Boeing will be fine by the end of the year. I kind of hope for a little pullback right now so we can double up and see where we end up in the near future. I also like the fact that the new CEO has went farther out in time than expected versus how quickly it can get back on track. I like that he's pulling a Steve Jobs and giving a worst case scenario versus a best case scenario. So Lance, let me get that question out of the way right now. Compare Snap and Zynga's collar trades. Snap, I think, is a much better opportunity. Snap seems like it's has more growth potential. Zynga over time has not been all that impressive. So if you ask me which one would do better, I would probably tell you right now, Snap has more of the opportunity, more of the potential. And 29 down to 5, what an amazing opportunity you could have had to double up or triple up on your shares. Snap's also a little bit newer. If I look at Zynga, right? The Zynga games. It's too cheap. Too cheap, I would do Snap in a heartbeat. And I think Snap gives the opportunity to double up. You probably do not have that opportunity with options using Zynga. So I would choose Snap over Zynga. You have $10 of upside. I'd probably just protect to put it because it is overbought right now. From what I've read, and it's been a while since I've read Zynga, but what I read, big opportunity. I wouldn't start putting covered calls on until we have it break $30. and then you pick round numbers to put some covered calls on it. But definitely with this amount of movement, I would not be covered calling it. I'd just be protecting it for earnings. I do not trade it, but I have spent some time on it. And Snap could be a phenomenal caller trade, especially if it doesn't make its earnings, because you could double up your shares and then some. Pretty fabulous opportunity. Any other questions? Thank you, Ida. Kevin, what are you doing for Apple? I'm primarily protective putting it. And in all honesty, we just moved protective puts down from 315 down to 310 and booked like $5. So we picked up an extra week. Excuse me. We booked every penny on a $5 movement using a protective put. And right now we're sitting at February 28th, giving us 4.5 weeks roughly. 310 long puts to use, and they're brand new as of today. At the end of today, we captured our profit from the 315 long puts, and off we went. That's why I was saying we're making like 80% on the way down, and that's why, because we rolled them down from 315 to 310, and we picked up an extra week. Well, going from February monthlies to February 4th weeks, and we're just doing a protective put because obviously they sold an ungodly amount of iPhones and product. The question is, will they have enough guidance to push them higher for the next earnings? Which means if they do, 350 on the upside, then they'll go through their summer doldrums, right? Good question. What are you doing with Baidu? Another good question. Baidu right now, same thing. We've got February 28th, 139 long puts. What we paid 740 is now worth 14. It was down that 125, bounced to 126. I think I would really like to just roll these down to a 125, maybe a 127.50, and watch Baidu take off from there. The problem, Baidu's earnings aren't until they're ways out there still. I don't have it written down completely, but right here, 2.6. Man, they could go on a pre-earnings run and take off. I may take some profits on those long puts and see if Baidu doesn't run for a day or two. A little bit risky, but again, this is a quarter that Baidu usually does very well. This is Baidu's quarter to run as they make a killing after the Chinese New Year's. 2016, 139 to 201. That is quite a run. 2017, they actually went the other way. 2018, 213-ish to 270, 284, quite a run. Boy, I'd like to see a bounce. I like the bounces it normally has. 2019, it was 180 to, no, 160 to 186. They usually has a very good earnings this first quarter. And it really all comes down to the Chinese New Year. I would expect it to be up at 150 after the earnings. So I'm going to roll those long puts down, or even take them off and try to add them back on in a week. That is my Baidu thought process. Look at the Williams percent R on Baidu. Hits the low end and just takes off, right? Hits the low end, takes off. Hits the low end and takes off. Hits the low end, takes off. We do have, in October, a bit of one, but really, it really likes to move. Earnings there most likely. Earnings here. Earnings here. We're there. I see it bouncing higher. Still think it's undervalued. So there's my Baidu thought. Any other questions? Taking a profit isn't too risky. Again, yes, taking a profit is the best thing to do. Taking your profits off the table is the best way to protect your profits. And we have been trimming some Baidu shares. I'm probably going to take those that we trimmed and go farther out in time than just June 2021 or 2020, excuse me. I'll go farther out. All right. Hey, appreciate y'all being here. We're up to 19 of you. Have a wonderful Monday. I will get this posted here shortly. Appreciate your time, and hopefully this has helped for you to see a little bit about the market and a little bit about what your money is doing. Until next week, trade smart. Remember, we're just real investment advisors trying to make some real money for real people in a real account in a real stock market. Talk to you guys next week. If I do not see you tomorrow for our trade findings and adjustments, 6 p.m. Mountain Standard Time. Have a good one, everyone. Talk to you later. Bye-bye.